Real estate, again, most common one. What we see more than anything are real estate related investments, and it can happen a couple of different ways. Again, investing through an entity where there's a limited partnership or an LLC in place and folks are investing into it. There's some folks that do single member LLCs where you'll set up an LLC just for your IRA, and we don't do those because it's a little bit in the gray area of the code. We'll just do the ones where you're a kind of a passive investor. But again, investing to a limited partnership or an LLC, and then that LP or LLC goes out and invests into raw land or commercial real estate or anything along those lines. The thing you have to be careful of there is ownership percentages. So if you and your buddy are thinking about setting up an LLC so that you can do an investment and you want to use your IRA funds, you can't own 50% or more of the total interest. So that's something that the IRS could consider a prohibited transaction and gives you a controlling interest. And that's going to be basically anything that your IRA is invested, anything that you've personally invested, anything that any of your lineal family members are invested into. So if you're going to have that 50% amount or more, we're not typically going to do it. If it's really close to that, we'll look at it and make sure there's not anything potentially prohibited. And then the second caveat there is that if you're a managing member, if you're the general partner of a limited partnership or officer or director, like, for example, David invests into A-List, we've got to look and see exactly what his ownership percentage is. Any of the other A-List guys that have invested into it, we've got to look and make sure that you're not over that 10% threshold, because if you're at 10% or more, but under the 50%, it may be fine, but we've got to look at it, and usually we'll ask for a legal opinion before we'll process the transaction, so it makes the expense go up a little bit. Go ahead.
I don't know if I missed this or not, but what are the logistics of doing this? I'm assuming that the funds have to already be in the IRA, and then you essentially liquidate whatever's in there.
Right. Well, it just depends on how you want. I mean, you can open a new account and make a contribution to it, just like. But we don't see a lot of that because typically somebody that's investing with us, it's going to pay a couple $100 a year in fees. They'll usually $5,000 or more. We don't usually see folks that are making their $100 a month deferrals or something like that. Somebody's making a brand new contribution or whatever. We can do it. We don't have any limits on that. It just kind of depends. But logistics are the account is established, just like you open anything else. We have an online application that you fill out to open the IRA. Then you'd either fill out that transfer form that I talked about to get the funds over here, or if you've got an old 401k, initiating that rollover and getting those funds over. And then once the funds are in the account, then you give us the investment instructions at that point in time. So from there, it just depends on what you're going to do. If you're talking about buying a piece of real estate, then you've got the account open, you've got it funded, then you're free to go try to find a property. You find a property, you're ready to put an offer on it, then you put the contract in the name of the IRA. If any earnest money needs to be put down, it comes from the IRA. Everything is done in the name of the IRA. With an LP or an LLC or a private stock, typically we're going to ask for some information on the front end. We're not doing any due diligence on the investment. We're not looking at it. We're not going to come back to you and say, you know what, this is not a good investment for you. You shouldn't do it. You ought to look at this, or whatever the situation may be. We're just going to look at it and make sure that it's something that can be done in an IRA, that there's not any of these ownership issues that we're talking about, that it's a viable entity that's been set up with the state. Like we'll see the articles of organization, if there's any type of offering memorandum. We get that stuff on the front end. Once we've got that set up and approved in our system, once you've got your account open and funded, you fill out a form and say, you know what, I want to put $50,000 into XYZ LLC, and then we move the funds at that point in time. You will provide us with the delivery instructions, whether we're sending them a wire, cutting a check, and then we make the investment. From there, that investment is held inside of your IRA, just like if you bought a mutual fund or if you bought a stock. Anything that's made off of that investment comes back into the IRA. If you had capital calls or anything along those lines, if you buy real estate and you need to pay the property taxes, or you need to pay the insurance, or you need to pay somebody's lawn service to come mow your lawn, that's paid from the IRA. So everything flows in and out of the account. Rental comes back into it. Right, exactly. You paid. It would be a distribution if you did, and you would pay taxes plus a 10% penalty at your age.
What if your cash flow happens to be negative, and your cash flow negative cash flow is so large that it exceeds your annual
contribution limit if you sell your real estate? You've got you've got a couple options: sell the property, or move over money from another account. From another IRA or old 401k. But that's a situation that fortunately we don't run into that often, because what would end up happening if you did run into that situation and you didn't have any other options and you couldn't sell the property or whatever, you would probably end up just having to take distribution of the property, because we're not going to allow you, if we find out that you're making any out-of-pocket contributions, paying for the property taxes out of pocket, not through the IRA, we're going to kick you out because it's a prohibited transaction. You're not allowed to do that. So,
how long does it take from the time you would go online to the time that you would be available for?
It really differs depending on where the money's coming from. The account will be open same day you send over the paperwork or submit the online form. That part happens very quickly. If you send in a transfer request, for example, like Charles Schwab, say you're moving money from there, Schwab will take a fax. You fill out our transfer form and fax it or scan and email it over to us. We'll send it to them that day. Realistically, within 48 hours, your account should be funded if you're having them send us a wire back. If you're asking them to send us a check, then you add a couple days to it. Now, if you're talking about dealing with a smaller bank or maybe an old 401k, it could take a couple of weeks to get the funds over from them before it's actually there. Once the cash gets to us, it's available immediately. We don't sit on it for 7 days and make it clear whether it comes in via check or wire. That's just part of doing business. So as soon as we get the funds, you're ready to go at that point in time. Yes, sir.
I'm not clear on the logistics of the LLC part.
Okay.
Can an individual buy property using self-directed IRA money and put it in the name of an LLC?
Well, the way that it would work was that from our perspective and the way that we'll process LLC investments, you would invest into an LLC. So you're not buying a property and then putting it into the LLC from your IRA or whatever. Your IRA, you're going to submit instructions to us to invest into XYZ LLC. And so we send the funds over to the bank account for that LLC. And then from there, you and your other members of that LLC would decide what property you wanted to buy in the name of the LLC. So that property is not in the name of your IRA. When you get your statement from us, it's going to say you own $100,000 of XYZ LLC. It won't say anything about the real estate that's held underneath it. We don't get that information. We're just looking at the equity investment that you've made in the LLC. So if you invest into that LLC and it goes out and it buys real estate, that's great. If you go buy classic cars with it, we don't care. I mean, baseball cards, whatever. At that point in time, once we've funded the LLC, all we're going to be looking for is an updated annual fair market value on your interest in the LLC, but we're not going to get involved with what you end up buying underneath it. So from our perspective, you're not buying real estate in your IRA. You're investing into an equity structure, which happens to be an LLC.
And the LLC could be in one person's name?
We don't do single-member LLCs. There are some other firms that I could send you to, but we feel that it's a little bit too much in the gray area of the Internal Revenue Code, and we won't process those.
2 or more. 2 or more.
Basically, yes.
So how does this 50% apply?
That's what you have to be under 50% ownership.
The other person would be more than 50. Right?
Correct.
So it doesn't matter.
Is it somebody's got to be?
So he's 51%, you're 49%.
So the 49 has to be the owner of the
IRA.
IRA.
Yeah. You as the account holder that's investing your IRA money, and that's any of your IRA money, any of your personal money, any lineal family members, which would include mother, father, son, daughter, spouse. If your combined interest is at 50% even or more, we won't process the transaction for fear of a prohibited transaction. So if you wanted to go do an LLC with one other person and that person happened to be your spouse, we're not going to do it. It's got to be a non-related third party typically. And they're going to need to have, so most of the stuff that we see, we do see some small LLCs where 3 or 4 guys will get together and do it, but most of the stuff we see is a little bit larger to where, there are 10, 15, 20 investors, whatever. You can definitely do the smaller stuff. You just have to make sure that your interest percentage is under that 50% threshold.
There really be I guess, why would you LLC it if it's already in the account, because they're both creditor protected? I mean, at least restricted to...
IRA is not going to give you as much protection as an LLC would. What we typically see, and that's where the folks that want to do the single member stuff come into play, and those accounts are quite a bit more expensive than what ours are. Usually you're going to pay a couple $1,000s as opposed to a couple hundred because of the involvement of an attorney that's writing an LLC. And those single member LLCs have to be written specifically to where your IRA is the only investor. There's not any other money coming into them. So it's a whole different animal in the self-directed IRA atmosphere. We're very much on the conservative side of the spectrum, I'd say. But so you do get certain protection. Where we typically see it would be where, I and you and 3 other people wanted to pool some money together to go out and buy like commercial real estate, most folks don't have enough in their IRA to go buy an office park or whatever it may be. So you see folks form an LLC and then raise money together through that and then go out and do the investment, something like that.
One more question on
Sure.
that. So in theory, if I had $100,000 in a Roth IRA,
Mm-hmm.
I can go buy a property and I will get tax-free rental income into there, and then say it's an Austin property, it's grown immensely. It's a rental property, so I would have been taxed on the entire amount of the gain
Sure.
as totally tax-free. That's all.
Yeah, the example that I used, there was a gentleman when I first started working at Sterling, and he's somebody in the DFW area, and I have no idea how he must have had a heck of a CPA that got it to where he could even make a Roth contribution. But he and another guy both made their contributions, and this is way back when the contribution was like $2,500, and they made their 2004, 2005, or whatever year it was. They both made their contribution. They each bought an undivided interest to a plot of land up in the DFW, the north part of it. It was a little bit of land off 35, I believe, and it was just raw land, and it had a billboard on it. And then something happened shortly thereafter. So they had this $10,000 piece of raw land, whatever it was. They knew somebody who knew somebody who knew something, because shortly thereafter they rezoned that whole area, and you couldn't put another billboard on that stretch of 35 for like 15 miles or whatever. Long story short, he, between doing that and several other things, he's got a Roth IRA right now that started with his $5,000 contribution that's worth close to $1 million now. And he won't pay a dime of taxes on any of that. So that's the best case scenario. That's obviously doesn't happen very often, but same thing. If you buy a piece of raw land and sell it 10 years down the road, and you bought it for 10 and you sold it for 500, as long as it stays under the umbrella of that Roth IRA, once you get to 59.5 and you've had it those 5 years, you can take it out tax free. Yes, ma'am.